When you think about getting an automobile, buying a home, or even getting an unsecured loan or a credit card, the credit score is going to be your driving factor. Now, not only when it comes to lending is a credit score really important, when it comes to really borrowing anything, when it comes to getting insurance, when it possibly could even cost you a job, the credit score nowadays is more important than pretty much anything. And having a good score can be the difference between getting approved and not getting approved. Now, of course, credit score can also be kind of your debt score, like people have kind of referred to it, as your ability to borrow. So in today's video, we're going to be looking at how to improve that score within 30 days. So if you have a very short time frame, and again, if you're looking to get the best rate for things, they are based on credit score. It is a magical number that has a ton of different factors that go into it, and I want to show you exactly how to really improve it. Starting with number one, checking your report and checking your score. Now, this is really kind of imperative, is knowing exactly kind of the basis of where your credit score is. So let's say, for instance, you're at a 650 score, which is considered fair credit. So it's not the best credit, you don't have the worst credit, but it is established credit. Maybe you have a few late pays, maybe you had a couple delinquencies, or the balances on the credit cards are getting a little bit too high. That, of course, is going to negatively affect your score. Now, when you look at a 700 to a 720, that is considered good credit, which again can really make a difference between an individual paying 6% for a loan and an individual paying 10% for a loan, which when you start getting into higher dollar amounts really makes a big difference. Now, to do this, your score is offered actually a lot of different places, including Discover, that you can actually get a score for free. But if you go to annualcreditreport.com, it is a government site that will allow you to download your entire credit report for absolutely free. And you can do this one time every year, and you can do it once from Equifax, Experian, and TransUnion, giving you access to your report. Now, this doesn't include a score, but that's okay. That's not what we're looking at right now, because of course, in this step, we want to make sure everything that you're seeing on that credit report is 100% accurate. There's nothing on there that is not yours. There's nothing on there that is reporting that shouldn't be reported. If there were, let's say, delinquencies that you paid off, you want to make sure they're done. You want to make sure the balances that are reporting on your lines of credit or credit cards are accurate as well, making sure that the basis, you know, everything on that report is 100% accurate. Now, number two, we look at opening a secured card or a credit card. Now, this, of course, is a very quick way to kind of build your credit. When you look at a secured card or starting a card with a lower limit, this is the basis. Now, we see this from like 18 to 25, or we see this with individuals that do have damage credit. One thing you do have to remember is if you're 25 and under, you do have to have the ability to pay, which means you do have to have a job to get a card. And that does include the secured card and the regular credit card. You have to have the ability to pay, or as it is today, lenders cannot lend to you if you don't have the ability to pay. Now, getting that card is going to open a line. Now, this is what starts really the biggest building block of your credit score. So once you do have this card, you're going to make a purchase, you're going to make a payment. That, of course, is going to be 35% of your score, because that will build up the payment history. Now, of course, it might not improve in 30 days, but you're well on the way and well on the basis to getting a higher score. Looking at number three, paying your bills on time consistently. This is, again, the biggest thing. When you look at 35% of your score, it is paying the bills on time and paying them consistently. This makes no difference if it's an auto loan, if it's credit card debt, if it's student loans, if it's a mortgage, if it's an unsecured loan. Anything in here you have to be paying, and you can't miss any of those, because one missed payment can actually knock out 24 months of on-time payments, which can be devastating for your credit score. Now, some of the key takeaways with this: to save on interest in the long run, paying more than the minimum payment on your credit cards, because we know credit card is high interest. Credit card is also considered bad debt because there is nothing tied to it. So what we mean by that is if you look at an auto loan, you have an auto loan. If you look at a mortgage, you have a home. The higher bad kind of unsecured debt, like your promise to pay, our credit cards, which run about 22%. And even as a nation, we're at $1.13 trillion in credit card debt, which is kind of incredible to think. But overall, making sure that you're paying them on time and paying down the balances. Now, if you spend a month in really improving that credit score in 30 days, if you put a big chunk of money down on a credit card, this can boost your score exponentially, really. when you put and when you're getting those balances down. Now, if you're only making the minimum payments on any of the loans, making sure that you are paying again that very minimum. But of course, a lot of this is going to go towards interest, not much towards principal, depending on what the rate is. And then, of course, automation. We've talked about automation a lot. Now, when it comes to automation, making sure that your bills are set up automatically. You don't want to miss a payment. Again, super important when it comes to building up your credit. So making sure that the minimum payments on those credit cards, the loan payments, the mortgages are all set up automatically so you can be in the habit of really paying them regularly, which of course will improve your credit score. Number 4, we get into the multiple inquiries. So if you're looking to improve your credit, let's say in 6 months you want to buy a home, you're going to go ahead and not do any hard inquiries. Zero. You don't want to pull your credit. You don't want to do it in a short time. This can harm your score. Now, 10% of your score weight is on new credit, which means if you're going through and you're making hard inquiries, so if you're pulling your credit, essentially it is going to ding your credit, meaning that you could have your score a little bit lower versus doing any inquiries at all. So definitely improving that credit score in 30 days. Do not do any inquiries at all. Now, before we get into the next point, go ahead and subscribe to the channel. Give me a thumbs up. Let me know in the comments how you improved your credit score and what time frame it kind of looked. So looking at number 5, credit utilization. Now, this is a very, very fickle ratio when it comes to credit utilization. And the way that we explain this is if you have a card with $10,000 limit. So $10,000 limit is going to require a 30% or less utilization on that card. So the way that this is determined, you have that $10,000 limit, you have $3,000 borrowed on that card, that puts you at a 30% utilization, and you want to be at or under that 30% utilization. Now, of course, the lower that it gets, so if you're 20s, your 10s, your 5, your 1, your 0, that is even better, but you do not want to go north of that 30% utilization because that is going to negatively impact your credit score. Once you start getting 50% of the utilization or higher, your credit score starts taking a nosedive, guys. When you get even higher and closer to that maximum limit, of course, this is just going to absolutely tank your credit, and it's going to tank it very, very fast. Now, of course, the averse of this, if you're paying down the credit limit and you're paying down the lines, it is going to make a big difference. Now, of course, one thing that you can do to really boost the credit in 30 days is increase the line. So when we think of that same scenario, $10,000 line, you have $3,000 on there, you're at a 30% utilization. You raise that credit limit to $20,000, you still possess that same $3,000 on that card. Now you're at a 15% utilization from a 30. Yes, your score is going to go up. Now, of course, you have to have the discipline not to use any of the additional funds in there, or you're going to be exactly in the same boat. Now, looking at number 6, keeping old lines and old credit cards open. This, of course, is the payment history. Like we said earlier, 35% of your score is the payment history. If you've had, let's say, a credit card for the last 5, 10, 15, even 20 years, for some of us, if you wipe out that card, if you close out your oldest credit line, you are going to essentially fast forward to whatever your next oldest credit line is. So you could be wiping out years, 5 years, 10 years, 20 years, or decades of payment history on the card that is open. And again, that is really important to note. Now, of course, the more well-established that your credit is, the less of an impact that it's going to have, but it could lessen your credit worthiness if you're closing out some of those old cards, just getting rid of that length of credit history. Now, if you're closing these out again, it could also mess with that utilization we talked about, because if you're going in there and you're closing them out, chances are you're not going to have another line to immediately replace them, meaning that you're going to have to take a hit on your credit. Now, number 7, we get into becoming an authorized user. Now, a lot of people have started doing this for their kids. When the kids turn age of 18, they do already have weeks or years of credit history built up, which is kind of crazy. I've actually seen individuals as authorized users that have a 700 or an A credit score. When they turn 18, boom, right off the bat, your parents have gifted you an A credit score because you were an authorized user on their card, which makes a big difference. And of course, you can definitely see a boost in this because of the payment history. Essentially, you're riding on someone else's payment history. Now, number 8, make sure you have no negative entries on your credit report. This is the reason why in step 1 we pulled the credit report. making sure again that your credit score and your credit history as good as possible, making sure there are no collections on there, there's no debtors, there is not anyone that is trying to get money from you on the credit report. Those are ones that are easy to clean up. They can say settled, they can say paid. You can get those off the credit report pretty quick to make sure that you make a big impact when you're settling them. And even a lot of debt companies will settle less than the amount. For instance, if you owe, let's say $2,000 on a medical debt, if you call, you can actually settle up for less than the amount, which again, it's not going to show settled or it's not going to show paid in full, but it is going to show that it is settled, meaning you don't owe that open debt. So guys, definitely how to improve your credit score in 30 days. Let me know what you guys think about the video, and I'll catch you in the next one.